Hi guys, it's Stock Curry. Welcome to the channel. We have a very special show with you guys today. I have Larry Jones and Stocks with Josh. I will be bringing them on in just a minute. But before we get to that, I want to get started with our market update because, man, it was a crazy day in the markets. And then once we get through the market update, we're going to be going through our value stock picks. You guys have been asking what value stocks we're buying. Well, today we're going to tell you. So let's start with this market update real fast, and then we will get to our value stock picks. To get things started, early in the morning, the home builder sentiment plunged 17% as buyers just stopped buying. There was a huge drop off in the number of people who were actually buying, and that caused a significant decrease in the home builder sentiment. So that was the first negative news for the morning. Now, then after that, take a look at this. We had, let me pull this next one up. Goldman Sachs reported earnings. Now, here's the crazy thing about Goldman Sachs. They beat earnings. However, second quarter profit fell 48% to $2.79 billion, and revenue fell 23%. So you might be asking, well, how can they beat earnings if their revenue and earnings went down? That doesn't even make sense. Well, keep in mind that analysts have a certain expectation for earnings. And so they expected Goldman Sachs to report bad. And basically, they just didn't report as bad as people were expecting. So that's why Goldman Sachs rose 2.5%. It's because even though their earnings were terrible, they were expected to be even worse. Now, I do want to get into a couple of things Goldman Sachs said on their earnings call. One is that they are reinstating their year-end job cuts. So even though their earnings are going down, the fact is that as we get towards the end of the year, they're going to start doing job cuts, which is just going to add to the unemployment rate that we already have. More and more layoffs will build upon the recession. And as Goldman Sachs and many other companies, this is going to get worse as time goes on. Now, the other thing that Goldman Sachs said is that inflation is deeply entrenched in the global economy. Obviously, not good at all. Essentially, he's saying that inflation is a global issue and no one central bank can fix it. And he expects more volatility, that is, more downside to the markets before things turn around and start getting better. Now, after that, about midday, Apple came out and said that they were slowing their hiring and spending. They're going to slow their hiring and spending. Now, this was not an official release. This was actually something that came out and it was leaked. However, quite a few people leaked it, and eventually it became obvious that this was real. I'm going to pull up the Apple stock for you guys real fast in the 5-minute chart and take a look. That is not Apple. AAPL. So we take a look at the Apple chart. Look what happened when that earnings was leaked. Apple's going along just fine. The whole market is doing well. Life is good. And then bam, the news gets leaked and Apple tanks. And Apple brought the whole stock market down with it. Keep in mind that Apple is 7% of the S&P 500 and 14, or actually now 15% of the NASDAQ. So when Apple goes down, the whole stock market goes down. And this is what I was talking about in my video yesterday. Keep in mind that while a recession is priced in, while the Fed raising interest rates 75 basis points is priced in, earnings going down is not yet priced in. So as we get more and more of these leaks and more problems, especially from the mega cap companies like we saw today with Apple, we can expect stocks to continue to underperform. Now, in addition to that, there was another leak that came out today that Apple's smartphone shipments fell 9% in Q2. Now, CNBC here is saying that Apple remains strong and in high demand, but the fact is it did go down 2% in Q2. So that still, by the way, even though it's down 2% from Q2 over Q1, it's still up 14% year over year. So that's where CNBC is saying it's strong. But just a little bit of insight, what we might see on Apple earnings next week. Now, after the bell, IBM reported, and IBM, this was kind of interesting. So if we take a look, Their earnings per share was $2.31 versus $2.27 expected, so they beat. Their revenue was $15.54 versus $15.18, so again, they beat. Their revenue rose 9%. They had a beat on both the top and bottom lines. But take a look at what happened to the stock. It was minus 4%. So why is that? Well, this is the issue that we are really watching out for with earnings is even if a company beats earnings, if they provide a bad forecast, their stock is going to tank. And that's what happened with IBM after hours. They had an earnings beat, a revenue beat, but they provided a bad forecast and the stock price absolutely tanked after hours. This is my concern, and this is why I remain pretty heavily invested in put options. I think we're going to see a lot more of this time and time again. Now, of course, Wednesday, we have Netflix reporting. I'll just talk about that real fast. People are bracing for a Netflix subscriber loss, okay? The company is working on some long-term fixes, but short-term, it is not good. So this is what we're kind of watching out for here, and we'll see what happens. It's kind of unknown, but everybody's waiting, and we'll find out what happens here shortly. So now that we've gotten through our market news, and I hope that helped you guys out, I would like to bring on Larry Jones and Stocks with Josh, and we are going to be going over our value stock picks. So our value stocks, whatever those are, I know what mine is. We're going to find out what Stocks with Josh's is and Larry Jones is. So first up, I want to bring on Stocks with Josh and welcome him to the live stream. Josh, how are you doing today?
Hey, man, good. I'm glad to be here. I just want to shout out a little bit to the family, Patience, Time and Glass, Hennessy. I see you guys. Appreciate you guys being in here. A lot of love the community. You guys are always great about staying connected. Thank you, Scott, for having me onto your show. I'm glad to be here. I'm excited to share some of my value picks with the family.
Josh, it's great to have you here. I'm so glad you could come join us. Now, I would like to introduce Larry Jones to the channel. And ladies and gentlemen, welcome Larry Jones. Larry, how are you doing today? All right, it looks like we got a little bit of audio connection issues with Larry, but he'll be working on that. So what we're going to do while we give Larry a chance to work on his audio connection is, Josh, if you could just tell our viewers, I know a lot of people don't really know who you are, just tell our viewers a little bit about yourself and some of your background in investing and what your investing style is.
Absolutely. I'm a businessman, first and foremost. I have a business that serves Northwest Indiana, Midwest, Chicago, Illinois, and Indiana. And I also have a business that serves Orange County down to San Diego. I've been investing for the last 20 years, and I've really focused heavily on day trading for the first number of years. And then I got into swing trading as my businesses became more involved. And it was really my connection and friendship with Larry Jones. Him and I meet for breakfast, once or twice a week. And we have a couple other friends that we meet with stocks. And so every time we'd get together, Larry would bring, to be honest with you, a phenomenal stock pick. He would bring the hot stock, and he will have already bought like 1,000 shares. And, and I would sit down and I would tend to get into the charts, and I would sort of, maybe say, hey, this is where I think this might go. This is where it might pull back. And, we've continued to do that for years, and, really fed well off of each other and made a lot of money. And over time, Larry kind of pulled me in and said, Josh, you need to share, what you and I talk about. You need to share that on YouTube. And so that's how I got into YouTube.
Excellent. Yeah, Larry Jones is amazing. He's a really, really great guy. And I'm so happy he got you on YouTube because you are a blessing. It looks like we got Larry Jones back with us. Larry, go ahead and introduce yourself.
Can you guys hear me?
Yes, we can.
Oh, great. I had a joke that fell flat. I was saying, don't adjust your screen. You're not at the Foot Locker. But so, hey, it's always a pleasure to be on with you guys. I appreciate you, Curry, for having me on your show. And I heard you guys, and I appreciate your kind words. And I'm about bringing people all of the resources I could possibly can to help the family. I'll call you guys the viewers. I call you guys the family, because the three of us, and I've talked with other influencers, and collectively we know that we are actually at the opportunity of a lifetime in the stock market. So I'm just going to leave it there.
Yeah, we definitely are. There's no doubt about that. So what I want to do today is, everybody's been asking for a value stock plays, and we today are going to get into what those are. We all came today with our own pick, and we'll see who's who's got what. So what I want to do is, I'm going to leave it up to my guests first to go ahead and do this. But before we get into their picks, I just want to say that to kind of let you guys know what a value stock is, in case some of you may not be familiar. A value stock is any stock that is trading at a valuation that's lower than where it should be trading based upon the company fundamentals. Now, when you are trying to value a company, you typically, depending upon how you do it, you might take 10 years worth of revenue or a year's worth of earnings. And there's different ways of doing that. And then you got to figure out what the growth is. And it can be a little complicated, but the easiest way to look is to go look at something called a PE, or price to earnings ratio, and compare that price to earnings ratio to what it is compared to the overall segment or industry that it's in. And so if you don't know how to look that up, the simplest way is just look for a PE of 15. 15 is the generally accepted fair value for most stocks. So, some will be a little lower than that, some will be higher, but generally 15 is your generally accepted fair value. So if you're under 15, you're probably dealing with a value stock. And so that's what we're going to be talking about today, because value stocks will eventually get back up to fair value. They always do. It's just a matter of time. And remember, a company does not equal its share price. The share price can very often be much higher than the company is worth, or much lower than the company is worth. What we want to do is, in that swinging cycle, try to find those companies that are valued lower than they're worth. And then when they get back up to fair value or a little above value, go ahead and sell them and take those profits. So that's what this video is all about, is finding those value stocks. And I'm going to go ahead and let Larry Jones go first, since Stocks with Josh got the first introduction. And Larry, why don't you tell our viewers what your value stock is and why you picked it?
All right. I am going to tell you what my stock is. It's actually three, actually. And I'm going to tell you which one I'm picking out of the three. So I'm going to cheat a little bit and be a slight overachiever, if you don't mind. I have one in technology, and it is Micron, ticker symbol MU. Now I've been traveling, so I'm a little disoriented. But you know what? I'm going to start with one that's going to surprise you guys. And that is Best Buy, ticker symbol BBY. And I'm going to tell you why I see it as a value stock. I'm scared to switch over, because when I switched over to it, my audio went out. So I like Best Buy. Could you say what the PE is there, Curry? You got it up?
Yeah, absolutely. It looks like our PE, the current PE ratio is 8.13, and the forward PE ratio based upon forward guidance is 8.60.
Exactly. I'm going to add to that Best Buy plans on having a $1.5 billion buyback, right? That could help its earnings to by $9 a share, but by fiscal year 2023, bringing it to $12.77. And so forward looking, Best Buy is, to me, a good value play. Psychology wise, Curry, when we go into a recession, some of the things that go up during a recession, actually, believe it or not, men's haircuts, women's lipstick, low priced hair, self-care kind of goes up. Those are the ones that actually fend well during a recession, because people, after being beat down, even people that get let go of their jobs, you want to do something inexpensive to feel good about yourself, right? And so people, take, baths, and you want to comfort yourself, but you want to do it, inexpensive. And so those are the things that kind of fare well. Actually, in the old days, lipstick actually went up during a recession because women just like to feel good about themselves cheaply. You know what I'm saying? It's like a dollar meal. And so that's why Best Buy is one of my value stock plays. And the other one is ticker symbol GLDG. There was a YouTuber named Stock Curry that brought that one to my attention. And the reason why I am doing that as a short-term value play, if you truly, truly, truly think a recession is coming, then I like to be in rotation ahead of the market. Meaning, we knew a bear market was coming, right? So Q3 of 2021, I started buying financials, energy. So when we got in the time frame where those stocks go up, I was already in them when they were cheap. Now, I'm telling you guys that gold right now is not performing well, but I believe that it will be performing well down the road. So I'm taking GLDG as a short-term value play. Stock Curry, can you rebrief us on GLDG?
Yeah, absolutely. So when it comes to GLDG, a couple of things going for it. First of all, this is not a company that really has earnings. This is a holding company. So that's something a lot of people get confused on. If you try to go look for a PE ratio on the stock, you're not going to find one, or it'll be negative or kind of weird looking, because this is a holding company. So what you have to do to value a company like this is you have to go look at the actual valuation of all of the properties that they have in their portfolio. Now, one way that you could do this without knowing anything about the company is to look at the book value, or PB, price to book value. And the PB, price to book value, on GLDG is currently 1.12. And any price to book value of around 1 is considered a value stock. Once the price to book value starts rising and we start getting up around like 2, 3, 4, then it's just overvalued. By 4, you pretty much want to get rid of it. So a PB, or price to book value of 1, is generally considered a value stock. Now, the thing about GLDG is the way that their properties are currently valued, they're undervalued a lot. They've got some properties that currently have a valuation that are 1/4 the valuation of a similar property that is right next door. And keep in mind, these guys have 7 working properties all over the entire world. And the way GLDG works is they're not an active gold miner. Their whole thing is they buy these distressed properties when they're extremely undervalued. They wait for gold prices and the valuation of these properties to rise, and then they sell them to an actual gold miner. And that's how they make their money. So right now, with gold prices going down, the valuation of those properties has been going down relative to the dollar, and the price of GLDG has been going down. But still, even with all of that, it's still about 1/4 of the actual valuation that it should be at right now.
Thank you so much, Curry. I was kind of tongue twisted as I was rushing to get everything together. I've been traveling. It's just when you travel and you try to get everything together at the last minute, it's not good. You did an excellent job, but that's where I am. I am actually between Micron and Best Buy. I am leaning heavy towards Best Buy. and GLDG. And I started buying some GLDG now when it's beat down, in hopes that I will make money from it down the road. So if you buy it right now, expecting to make money in the short term, you will not. All right. So I'm just going to warn you on that. But this is a stock that you could easily 100, 200, even 300% if it really like Stock Curry said, it could triple your money if you get out at the right time. All right, Josh, you go until I get my tongue in tech.
All right, before we get Josh's stock pick, what we're going to do is we're going to discuss this, give our own thoughts, because each person here has their own unique perspective as to what they think is a good stock or not. Josh, this is your first time seeing a GLDG. You probably don't know that much about it, but what I'm going to do is just give you a second to kind of gather your thoughts. We'll bring the chart up again because I know you're a technical guy, and I'll just give my thoughts on it real fast. You know, I own GLDG. I placed an initial buy on it when it hit a strong support level of $1. I have another buy order ready to go when it hits 85 cents. We're not quite at 85 cents yet. I think the lowest we got was 86 cents. But if the dollar remains strong and the gold prices continue to go down because the dollar is strong, then I do think GLDG is going to get back to that long-term support level of 85 cents. And what I'll do here is I'll just pull up the chart real fast to kind of show you guys that, because give Josh a chance to take a look at it as well. So what we have on the screen right now is there we go. What we have up on the screen right now, this is the monthly chart on GLDG. And based upon some support levels that I saw over here and some support levels I saw over here, that's where I got my 85 cent support level. There's obviously another one all the way down here at 54 cents, which if we break through 85, 54 would be the next stop. If we take a look at the weekly chart, we had strong support here at $1, but we did break through. And then if we take a look at the daily, you can see that'll clear how we kind of hit the 85 cent point, but we've flattened out. So there's at least a chance this is the bottom. And then the MACD, although it's very, very flat right now, very close to zero, it does look like it wants to get that golden cross here soon. The RSI is still bearish at 36. So, and based upon the candles, we're still below all the EMAs. That's still bearish. The EMA is the 10-day is still below the 21-day. That's still bearish. So overall, it's still quite a bearish stock in the short term. But like Larry Jones was saying, I do think this will do well in the long term if it can turn itself around, which I do think it can. So that's my thoughts. Josh, I know you haven't had a lot of time to look at it, but what are your thoughts on GLDG?
I looked it over briefly. I am unfamiliar with it. One of my first go-tos is the RSI. At the moment, it is in the negative. It's in the bearish. The bears have control of it, and I think that as far as long-term support, I think it's on a support right now, and we have to see if that holds. I wanted to take a minute. I don't know if it's if I'm good to go yet.
Yeah, go ahead.
We're talking stock picks, right? And I have to throw in a shout out to Larry for a great crypto pick, which was Polygon-matic. Now, Larry and I started doing Technical Tuesdays earlier this year, and we'd spend and devote a single day to talking crypto. And I would come in with various cryptos that I wanted to talk about. And no matter what crypto we were talking about, Larry would, hit me on the shoulder and say, "Yeah, what about Matic, man?" Now, Matic, he was ahead of everybody on that. And to be honest with you, I bought more Matic because of him, and I kept an eye on it because of him. And we were buying in. We shouted it out on around the 47 cent mark. Today it was, I think it hit right below $1. I told everybody yesterday on my page that it was going likely to $1, and that's what it's done. Now, it could go higher. I would like to see it pull back. It's hitting resistance at $1. But if it broke through that, then the next level up would be 125 to 129. And I just wanted to shout that out because I'm telling you, at the end of the day, whether it's a value stock, a growth stock, or a crypto, we're all trying to make money. And I got to give props to my man on that one.
I appreciate you guys. Well, hey, the reward is people making money. Somebody commented, and I read that I was cheating by using Curry's stock pick. So my picks are Best Buy and Micron are two of my picks. So GLDG, I would say I would wait until these gentlemen, they called their support. I agree with Stock Curry. I would wait to buy it when it hits the levels that he suggested. But actually, not just with this stock, but with most value stock right now, you're not going to see a lot of bullishness right now in a lot of these value stock. Correct, Curry?
Yeah,
some of them you're not going to see that right now. Remember, these are recessionary stock. These are recession stock. And so we have to go through this cycle. But the reason why we buy them now is because the PE, the price to earnings, or should I say the multiple that you're paying for the stock is actually low. And when it comes up much higher than it is now. And a lot of times you're doubling, tripling, and sometimes quadrupling your money the further you get away from a recession. So these plays that all of us are talking about, it's just going to take time. But now's the time when you want to know what they are, because you want to buy them when they're beat down. You want to buy them under 16, the PE being under 16. And so when it rises back up, I always use the parable of a camel walking up to you and bowing down. You get on the camel's back and the camel stands up. That's the way I visually see these type of plays.
Well, I want to jump in on Micron. That's actually on my short list of 10 value stocks. So Larry and I were actually on the same page with that one. And as far as Best Buy goes, I had looked at that in recent days as well. And Forbes had noted it as one of their top 10 value stocks. So I actually agree with Larry on Best Buy and Micron being good value stock plays. Now I can jump into mine if you'd like.
Yeah, go ahead. Let's do yours.
Okay. I just want to take a step back. The first half of this year, the last time we did a live, I talked heavily about the fact that we've been in an extremely bearish environment. First half of this year has been one of the worst environments in over 50 years. Obviously, we've been dealing with inflation and the fear of the Fed tightening, right? This has basically resulted in great high value companies getting discounted below their market value. Okay. Now, what I look for when I consider a value stock, first thing I do always when I'm doing some fundamentals is actually to look at their leadership. If it's got good, solid leadership. The second thing is sort of an influence by Warren Buffett, and you kind of get influenced by the guys that you follow, and this isn't necessarily his top value stock value, but it still stood out to me that you want to look for companies with a competitive edge. Now he refers to it, I think, as sort of a moat strategy. An example he gave for that was at one time Coca-Cola. They had such extreme dominance. People were used to their drinks that it was very, very hard for any other beverage company to break in and get the market share that a company like Coca-Cola or Pepsi had. So the second thing I really want to see is competitive edge, right? And then the third thing I want to kind of define for everybody that's listening is we're not talking tonight about the next hot stock. We're not talking about, a banger. We're talking about for me, when I consider value stocks and when I pick them, for me, I'm thinking about wealth preservation. I'm thinking about money that I'm going to put into the market that's going to give me a yield and it's going to grow. But I'm near, not that I can be 100%, but I'm largely believing that it's risk to the downside would be very low. So this is the type of money that that I'm not expecting massive growth, but I am expecting a return over time, which is the next factor. Whenever we're talking value stocks, I am by nature a swing trader. That's what I do. Options, bot trading. I do investing as well. But when we're talking value stocks, I'm not talking stocks that I'm swing trading. These are ones that I'm literally, set it, forget it, leave it for the next 5 years. So my pick, and also this last caveat I want to give everybody is that when you're looking at value stocks as a portfolio, you want exposure into different categories of the market. And so I'm giving this stock pick, but if you had other value stocks in this category, well, that might not be the right one for you. But if you didn't have a value stock in this category, then this might be a great pick for you. So my first pick, I've actually got a couple, but my first pick is Enterprise Products Partners, EPD. Okay, this is a midstream natural gas and crude oil pipeline. They've got a PE ratio of 11.40, I believe. I'm not sure if that's as of today. Analyst consensus for the earnings on the stock price is positive. It's got an average price prediction of around $33. It's currently trading around $24.96. It's got a pretty high annual dividend yield at 7.61%. So 7.6%, right? They've consistently, one of the things they've done great at is given a forecast for earnings for the entire year. A lot of companies will go quarter by quarter because they want to basically maintain control to raise or lower their forecasted earnings. These guys came out boldly in February and gave a 30% up forecast year over year for the entire year, which was a very bold move. I think there's a future price target on them of around $40, right? I think it could easily go that high. And I want to just comment about some of the companies I looked at. I actually think that Costco, United Health Group, NVIDIA are great value stocks. But the reason why I didn't share them as my pick tonight is a lot to do with retail community investing. NVIDIA is $161 a share. United Health Group is $519 a share. Costco, $516. And so I specifically wanted to find a value stock. If you're on my channel, I often talk about investing $25 a week. Now, there's a lot of people that are listening to me right now that can invest a whole lot more than that. But there's a lot of people that's as much as they can invest is $100 a month, $25 a week. So I wanted to pick a stock that they could buy at least one share of every single week. And so that's why I specifically looked at that company. I'm going to throw out my second pick, which is Perion. Before I do, did you guys want to share any comments on that? I lost them.
Oh, no, we're here. Any comments on that one? So for EDP, we got a current PE of 12, forward PE of 10 currently. So it's indicating that analysts are still expecting earnings to go up. I guess now the dividend yield
of all the analysts that cover it, there is a complete consensus of increase.
Right. The dividend yield is really good at 7.6%. That part I really like.
Now, I don't know, to explain to you why that is because they're a master limited partnership. I don't know if you knew that. These guys do not have to pay corporate tax as long as they're giving 90% of their profits back to the shareholders in the form of a distribution. So that's why they're able to give such a good return.
Okay, so for me personally, I would throw this into a dividend portfolio. I think as a dividend stock, it's excellent. For value stocks, especially going into a recession, I personally would like to see something with a lot lower of a PE ratio, but that's just me. What do you think, Larry?
You know, and what do they do again, Josh?
These guys basically are oil pipelines.
Okay.
Which is another reason why I chose them, is because I believe, to be honest with you, I didn't have this type of a company in my, what I consider my long-term investment portfolio, and I wanted more exposure to it. So that's also another reason why this is, just to be clear, this is actually a pick for Josh Nichols. All of my picks are for me.
So in this oil pipeline, and here's where you have to use a little psychology trading, especially with oil, where it is. Where is this oil pipeline? Who does it feed? You know, right now with oil, we have to look at everything. Sometimes just looking at, you know, the PE and do they have cash, forward earnings is one thing. We also have to look at what is happening with the company, right? So for you know, for instance, if let's say this pipeline was from the Saudis and they were going to give us some more oil because our president just went over there with hat in hand, then you know that forward looking, that would be looking good, you know, to add to it. So where is this pipeline, and you know, what does that stand?
You know, I wouldn't be able to advise as to where the pipelines are, but
Okay. Well,
I will tell you that they are the largest. They're the largest company of its kind in that market segment.
Okay. Okay. I would have to. I personally would have to really dig into it. You know, certain stocks like this, certain stocks. Curry can tell you. You can just kind of look at the company overall and just kind of get a kind of a snapshot. But companies like this, you got to dig a little deeper, and it takes time to see the whole picture.
Well,
and I'm sorry.
No, go ahead. I was going to say I've done my digging, and you know, and I think that for me, it's a value play.
Gotcha.
You know, I understand the concept of a beat down stock. That's kind of why I shared my view of what value can be. You know, and I would say that there's less of this being a beat down stock. Another reason why I chose this stock, and I'm just kind of sharing some of my view of the stock, is its long-term trend. So even in the midst of this massive pullback, it's pulled back, but it's still trended upwards. So if you look at the charts, which is another thing, you know, I made this comment on my Polygon-matic play yesterday. I said that one of the first things you have to consider when charting and looking at any stock is the long-term trend. You want to be buying something that's going up. And I believe that this has actually had its biggest pullback back in 2020, and it's been consistently going up from there. So
okay. Yeah, I'm definitely going to check it out. I'll tell you what, I'm going to go out on a limb in my Curry. I may go out on a limb in my Moomoo, and I may just put all of our picks in Moomoo and just put some money in each of them. You know, put a couple of $100 in each of them and just kind of see how they perform over a period of time, right? And I like.
Fun idea, Larry.
Say that again.
I think that's a fun idea.
Yeah. Why don't I do that for the good people, and then we could kind of monitor it from there.
All right. Before we run out of time, I want to give my second pick, because each of these actually came down to, you know, it was like the horns of a dilemma between choosing one over the other. And I actually lean slightly towards this one, which is Perion. Are either of you guys familiar with Perion and what they do?
I've heard of it. Go ahead.
So basically, these guys.
First, give the ticker symbol, please.
It's PERI. Right. Okay. So they've got a market cap of about $1 billion. They've also increased their guidance. Each of their earnings, each of their annual guidances, they've come out and they've increased it year over year. What they have as far as their product goes is a unique cookieless tracking solution called Sort. There's an estimated revenue of between 450 million and 465 million. That was for 2021. and their new estimated revenue for 2022 is 610 million. These guys are sitting, they have no debt, zero debt. They're sitting on 320 million in cash. They've got a 9 times EBITDA. They gave their full year guidance in February of a 30% increase. It's got 20% institutional ownership. I would say there's a price prediction on this of around $36. I also, again, chose this one because of the price point. What's one of the factors? It's currently at $17.97. It's the type of share price that if people were doing weekly investments, they could possibly afford to add 1 share. I do want to highlight the drawbacks to the picks that I'm giving. One of the drawbacks to Perion, one of the criticisms of the company, because the financials are just amazing, right? They're sitting on nothing but cash. They're a cash-rich business that's growing by leaps and bounds. And someone might look at all the fundamentals and go, "Wow, this is just amazing. Why isn't this stock even higher priced?" There's been concern about the privacy changes in the ad tech space. But part of their business is this cookieless ad tracking, right? Which is very unique. It's a smaller part of their business. The greater part of their business comes from basically some of the technology that does, you might say, utilize people's data, which is becoming a hot topic, in the Senate, right? Their majority of their business currently comes from their partnership with Microsoft.
Out of the two, I actually like this one the best, even though the PE seems like it's fair value now. The PE is 14.5. But sometimes when the PE is like fair value 14, let's just say, 14 and a half, I'm looking at it over the last year. It's down from the highs. It's down about 40%. That's what you actually like to see in a bear market if you're looking for a value play. You don't want to see a chart going up and buy it. You want to see a chart that has come down, going into, with a threat of a recession coming, should I say. And I actually going to do some more study on this company. When it gets to companies like this, I like to look at the CEO, see what their background is, look at everything that's going on around it and not just focus on the price to earnings. What about you, Curry?
Yeah, I agree with the PE ratio being 14.55. To me, this is not a value stock. This is fair value. But like you said, being that it is already down 40% from highs, they're debt free. They're continuing to grow revenues. I do like it. I actually kind of like it. I would, if I were to buy this, I'd be putting this into more of a growth portfolio than a value portfolio. Between your two stock picks, I actually like EPD better. It hasn't come down nearly as much as the other one does. EPD is only down about 15%. But the PE ratio is a lot lower, and it still has that dividend to go along with it. So of the two, I actually like EPD better, but they're both decent.
I forgot the dividend. I'm with you on that. Yeah, I love dividends. I'm gonna have to flip-flop on this. I actually, a little different than you guys, I would actually put it in my dividend portfolio.
Yeah, if I were going to buy EPD, this would definitely show up in my dividend portfolio. Absolutely. This is a great dividend stock.
Absolutely. I'm sorry, go ahead.
I would agree with you. I want to throw some comments out. My picks have some different things into consideration them. One, I'm considering the folks that are following us. I'm considering the price ranges that they would want to buy in. And I would agree that this one in particular, I said, these guys are going to tell me it's a growth stock. The reason why I still threw it out there was because they have no debt. So they're that one growth stock that can absolutely survive, and that would have been twice as expensive if you tried to buy it in a better environment. But in this environment, if you were ever going to get a company like this to come down in price, then this would be your time to buy it.
Hey, can I do a station break right here, Curry?
Yeah, let's do it.
All right. So we're at about 1,000 views, 1,000 viewers watching us live right now, but we only have 410 likes. You guys know what I'm gonna ask. Let's hit that like button and get it up. Let's get these likes up. There you go. Hit that like button. All right. And let's subscribe. Especially for those of you that came from Stocks with Josh page and my page. Let's see some coffee cups in the house. And let's just get this up because we are having this discussion so that you guys could learn and earn. Okay. And hopefully we say one thing. I learn a lot from both of these gentlemen. I'm going to stay fluid like water till the day I die. I'm never, ever gonna be a full glass. All right. There you go, Curry.
Appreciate it. And the other thing I would just add to that is down in the description of this video, you are going to find links for both Stocks with Josh's channel as well as Larry Jones's channel. So I would just encourage you, if you are from my channel and you're not familiar with these two guys, please go subscribe to Stocks with Josh and Larry Jones. They are incredible content creators and they really have your best interest in mind, and they are here to help you make money. Larry Jones has a $5 a day millionaire cup challenge or whatever he calls it. And it's just $5 a day, getting you into the habit of investing and putting you first so that you can become financially free. And Stocks with Josh is an incredible technical analyst. His picks have just gone through the moon. He's actually kind of new to YouTube, and his channel is already blown up, and for very good reason, because he is that good at picking stocks. So I highly recommend you go subscribe to both of their channels. And again, their links are in the description of this video.
Well, hey, thank you for that, Scott. I just want to acknowledge that I learn a lot from both of these gentlemen. Each of them has their own very unique skill sets. For me, Larry is always got his thumb or ear on the market as far as what is coming up and where it's going. And Scott does a great job of breaking down companies and looking at them very thoroughly. So thank you both for contributing that.
Yeah, thank you guys. For everybody watching right now, I apologize that we can't get to your comments. My comment stream is broken for some reason. It's the first time this has ever happened. So my apologies for that. But I will review your comments afterwards, and I'll be putting down in the comment section some replies to you guys. So thank you all for commenting. Anybody who has done a super chat, thank you so much. Again, I can't see it right now, so my deepest apologies for that. But let's get into our very last stock pick. And then I've got something very exciting for my channel members. So what I'm going to do is start with my stock pick. And I have to start with a little story because this stock was not at all on my radar until this weekend. So here's the story. I went into Walgreens and I was just buying some water and a little bit of allergy medicine. And I go to checkout and the cashier asks me, hey, would you like to get a Walgreens credit card? I was like, what are you talking about? I've never heard of this before, right? So I asked her, how long have you been offering these Walgreens credit cards? And she says, I don't know. I've only been working here a few weeks, but as long as I've been working here. And it's been about a month since I've gone into Walgreens, so I figure it's probably something fairly new. And I said, are you getting anybody to sign up? And she said, yeah, I get about 1 to 2 per day. And the numbers start going through my head. I'm like, 1 to 2 per day per cashier, maybe 4 to 5 per store. How many stores do they have? And that's per day. Think about all these people who sign up for credit cards. So here's the amazing thing about a store credit card is 2 things. Number one, customers who get a store credit card on average spend 50% more. So their spend increases by 50% once they get that store credit card. And 2, whoever the store partners with, whether it be Visa or MasterCard, they're going to get kickbacks for every new card sign up. And so this is going to be a significant revenue and earnings boost for Walgreens. So, of course, as soon as I came home, I got really excited. I was like, I got to go check out this stock. So I pulled up Walgreens on the chart, and what I found is that, first of all, you can see here on the monthly chart that Walgreens has been dropping. It is completely bearish on the monthly chart. However, I've also noticed that in the past few times where it dropped below the 300-month EMA, that it ends up bottoming out just a little bit below it. You can see it here, here, and also over here. So as we continue to drop, I'm looking
at the 200-month EMA.
The purple line at the bottom is my 300-month EMA.
Okay, go ahead. I'm sorry. Thank you.
So as I'm seeing this start to bottom out, I'm thinking, okay, technically we're going to hit a bottom around 36 or possibly 32. So somewhere between 32 and 36, this thing's going to bottom out, and then it should start going back up from there. Now, the other thing that I'm looking at is, okay, we're probably pretty close to a bottom, just looking at the technicals. How's the PE ratio? Well, the current PE ratio on Walgreens is 6.5. That is about half, somewhere between half to a third of fair value. And then I got really excited when I noticed the dividend yield was at 5%. So I'm like, wow, a dividend yield at 5%, PE ratio of 6.5, and they've got this huge revenue stream that I know is not priced into the stock right now. And I got super excited. I actually bought some today, and I have not owned the stock before, so it's a brand new stock for me. And I wasn't even sure where to put it. Do I put it into my dividend portfolio, my growth portfolio, or my value portfolio? Because it's kind of all three things combined. So I don't normally get too excited about stocks. And I know you guys are probably asking me to talk about some other value stocks that I've bought in the past. Certainly, there's a lot of other value stocks that I bought that have PE ratios of around 2. In fact, almost every stock in my value stock portfolio has a PE ratio of 3 or less. This is the first stock that has a PE above 3 that I've actually added to my value stock portfolio. We're at a PE of 6.5. I didn't go all in because I do expect WBA to continue to drop a little bit more from here. But I'm going to start dollar cost averaging into the stock because I really think this is going to be a big winner over the next few years. What are your thoughts, guys?
Well,
you go ahead first, Josh.
I was just going to say that I think it definitely falls into the category of a more traditional value stock. I like the idea of it, especially in a recession. I actually remember trading Walgreens back in 2008, 2009, when we were going through a heavy recession, and it was doing pretty good then. Matter of fact, if I go back and look at the charts, yeah, pretty much from 2008, it went on a run all the way until 2013. It pretty much was just moving up. And so here we are again. After 2015, it has been trending down this entire time. I see support, and again, I'm largely a technical trader from the standpoint of looking at charts. I see the strongest next support at $32, $32.40 to be specific. And I see that if it breaks above $44, then I think it would reverse and establish a new trend. And if we went into a recessionary environment in 2023, I could see this being a great company to be investing in.
What are your thoughts, Larry?
I absolutely love Walgreens, and I have Walgreens. I talked about Walgreens at the beginning of the year for my followers as a good safe place to put your money in a bear market if we should get caught by surprise by a recession, which we will. It's coming. But I like Walgreens, and I actually bought Ulta along with Walgreens stock, Curry. So I agree with you. So a lot of people, when they're looking for a value stock, They just want a PE of 5 and 4, and that's not always the case. Walgreens, there again, what did I just say that works good in a recession? Lipstick. Who sells lipstick? Walgreens, Ulta. And so it's consumer discretionary, but it's so many places that you could put Walgreens. So I absolutely love Walgreens. I'm keeping Walgreens for the long haul. Walgreens is actually setting up their own what do you call it? Outpatient. The Walgreens around here, they were actually redoing the entire a third of the Walgreens to where you're going to have doctor's visits in the Walgreens. Okay. They are really changing their brand looking forward. I like what they are doing. They're going to be getting into the kind of like the AI, artificial intelligence. And so Walgreens is really, it's a standard, but they're actually looking for the future. And I believe that they're moving in the right direction. So I'm absolutely in with Walgreens.
Yeah, I appreciate the feedback and analysis from both of you guys. We're going to try really hard to keep this at 1 hour. We got about 4 minutes left. So let me just wrap up with some very exciting news. First of all, I just want to say thank you so much for Larry Jones and Stocks with Josh for joining us today. I really, really appreciate it. Once we are done with this video, I'm going to go back through your comments and get responding to those. If you haven't done it already, don't forget to hit the like button and subscribe. And down in the description of this video, I have links for both Stocks with Josh and Larry Jones. Make sure you subscribe to both of their channels. And now I want to get into the very exciting news. I know a lot of you people, at least those who follow me, have been waiting for this for a very, very long time. And I am very happy and excited to let you guys know that I have reopened VIP Discord signups. The last time when I let you guys know that we were going to close these out, we actually, I had about 150 slots open and we sold out in just over 1 day. So right now I've got 500 slots open for this. Those 500 slots, if we do what we did last time, they're probably going to be sold out by the end of Friday. But I wanted to let you guys know that we have been giving all kinds of up-to-date stock picks. And a new coach I just hired is actually a day trading coach. She is very successful day trading. She turned a $100,000 portfolio into $200,000 last year by day trading. And then we've also got another coach who's very, very good with swing trading. And what he does is he actually does the wheel strategy where he'll sell a put option to buy a stock. And then once he owns it, he starts selling covered calls. And that strategy will average about 30 to 35% annual returns per year. And then you get all my stock picks as well. My portfolio is up almost double on the year so far. As the market overall is down 25%, my portfolio is doubled. So you have 3 people in that Discord, coaches, that are going to help you out. And all of us have made money this year so far. Not a single one of us has lost money. And I also have a full training program over there that includes how to do options trading, how to do technical analysis, how to do fundamental analysis. It's all included for just $25 a month. So I know you guys have been waiting. I got exactly 500 slots open. When they're full, if they're gone, I'm closing it once again. And based upon last time signups, those will probably be filled up within about 5 days. So don't wait this time. Make sure you get in there so you don't miss out. And then I also wanted to let you guys know that I have a new personal finance channel. So stock investing is one part of growing your net worth. We've also got to increase our income, and we have to make more money so that we have more money to invest, especially as wage growth has gone down. We need to find other ways to increase our income. So we're going to be talking about how to increase income there. My first video went up about how to actually graduate from college debt-free. We also are going to be talking about good use of credit card spending, taxes, all kinds of stuff over there. Everything to do with personal finance, everything outside of investing in the stock market. So make sure you go subscribe to my other finance channel as well. And I just want to ask our guest here if they have any final thoughts before we go.
Yes.
Well,
First of all, I'd like to say Stock Curry has opened up new slots. And what does the people do? Had to get that in there. Hey, listen, good people. Take the time soon as this video ends to help support Curry, not just Curry, but in his bio beneath, he has a couple of links. I happen to know that he has a link for Webull, and he also has a link for Moomoo. If you have one, download the other. It's just that simple. The three of us, and not just the three of us, but we're working collectively to keep them green, to help make them green and to keep them green. We probably have one or two more of these to go, and then we'll come back, down the road. But we're going to be giving you guys some good vision on where to look for stock. And we're going to give you some good stock pick like these value stock today. So make sure you click those links below. I want to end by saying thank you for having me on your page. I just wished I was here earlier and not running in. I appreciate each and every one of you, the audience members, and you guys support us by simply hitting that like button and that subscribe button. And I'm going to leave it right there. Josh?
I just want to say that we have the best community. I love this community. I love all you guys that followed us along tonight. You guys are the best. I love all the comments you've given. Congratulations, Scott, on the advancement of your Discord and all the new members that you've added. I think that's very impressive. I think sounds like a powerhouse team, and I'm sure it's going to be well worth the investment. I mean, the amount of money that you can make in a good Discord completely makes the cost of that Discord irrelevant to me. So congratulations on that. Well done. I'll be looking forward to checking that out.
Absolutely. Absolutely.
Hey,
can I say this?
Yeah, go ahead.
When there's great fear, there's great opportunity. I just want to let you guys know this is your time to not be looking at the glass half empty, but half full. It was half empty at the beginning of the year. Now we're coming to we're so low in the market. Now you got to look at the glass half full, because I personally believe there's more upside than downside at this point, even with a recession coming. All right. That's just me. And so take some of these plays, join Stock Curry's course. I mean, the amount of money that you could make by just spending a few dollars, you guys see people are up over 100%. And this is not just about, his course, but it's also about the free stuff that you learn on his page daily. So make sure that your subscribe button is yet checked. Okay, everybody, please. And stay encouraged and look for opportunity in a negative time, right? So now is the time to look forward. And I'll end by saying this. It doesn't matter how much money you have lost. It is nothing compared to the amount of money you could make from here on out.
Yeah, excellent and very, very wise words there, Uncle Larry. Thank you so much for sharing with the channel and the members. We appreciate everybody joining us today. These value stocks, as well as many others, are going to be part of my value stock investing portfolio. I have a brand new Millionaire Club challenge that will be starting in August, and we're going to be using Moomoo for that. If you go sign up for Moomoo and deposit at least $2,000, you're going to get 10 free stocks. And on top of that, if you deposit just $100 or more, you're going to get 6 free stocks. Yeah, I have a link for Moomoo down in the description of this video. Make sure you go ahead and click that link so you can get your free stocks and join us on this Millionaire Club challenge. It's going to be value investing. That's all we're doing. You don't need to know how to trade options. You don't have to have any special education. Anybody can do this.
That's good.
Anybody
That's
can
good.
join this challenge. So come join the Moomoo Millionaire Club Challenge that I'm going to be starting in August. We're going to be doing a value investing portfolio. You've got a few weeks left to open up your account and get it funded. I am personally going to be starting that challenge with $2,000. And then we're going to be adding $200 every other week on what would be your normal payday. Or if you want to do $100 per week, if that's easier for you, you can do that as well. But I don't want you to miss out on this because Warren Buffett, by doing value investing, earned an average of over 30% per year and became a billionaire by doing value investing. And I've done the math on it already. What's that?
What's the saying about bear markets and bull markets? Millionaires are made in millionaires are made in bull markets. Go ahead, finish it.
Yeah, millionaires are made in bull markets and billionaires are made in bear markets. Warren Buffett, John Templeton, and many others have proven that to be true. Now, we're not going to go for $1 billion. Let's just make it a little more reasonable. We'll just go for $1 million. And by my math, if we generate the same type of returns that Warren Buffett generated, we will become millionaires within the next 10 to 15 years by starting with just $2,000 and depositing $200 every other week. It will happen. The math works out. You can go run the math yourself. So that's what we're going to do. We're going to try to go in the footsteps of those who have done it before. You know the old saying, if you want what successful people have, then you got to do what successful people did. And Warren Buffett, John Templeton, and many others became billionaires by value investing. So we're going to do what they did so that we can have what they have. Thank you guys so much for joining. I appreciate everybody that joined the channel, everybody from Stocks with Josh channel, everybody from Larry Jones channel. Thank you so much for my guests, Stocks with Josh and Larry Jones, for joining me today. I appreciate you guys. And are we going to do this again sometime? Because I think this is great.
I tell you what, I hosted, you hosted. Josh, it's on you.
I can host. I'll host the next one. That'd be my privilege to have you guys on my channel.
Excellent. Well, it's set then. Our next live stream with the three of us is going to be with Stocks with Josh on his channel. Make sure you subscribe to his channel so you don't miss out on the next live stream. Again, I have a link for Stocks with Josh's channel in the description of this video, and we will update you once we talk after this and figure out a date and a time. Thank you guys so much for joining. I hope you have a lot of success trading, and I will see you